Warriors, traders, Dale Pinkert here at TradeGATEHub.com, powered by TradeView Markets. Check out TradeView Markets are now offering trading in over 30 futures contracts, futures options as well, continuing to expand their universe of tradable instruments. You could download a demo and check them out. The big news in the market this morning with G7 meeting is the ban on Russian gold, which a lot of people are interpreting as it could be pretty bearish as the Russians will begin to discount their gold and sell to China and India. But who knows if they're even going to sell their gold. So, they've been a big accumulator along with China of gold reserves, and just because they're banning it doesn't mean they're going to sell their gold. They still can sell their oil, albeit at lower levels. But when I think about this in the gold, and you know that I like both gold and silver, but I believe silver is in the beginning stages of another wave of outperformance against gold, as expressed in the gold-silver ratio. Those in the room last week, I posted it on Friday when we were getting a reversal in silver. We also rallied to resistance in the gold-silver ratio. If you look at the weekly, what it's going to take is closes back under this low, a little under 82, which will then accelerate the gold-silver ratio back to the downside, which is my preferred count or scenario in the gold-silver ratio. Silver put in a good week. We're getting a little bit of a pullback on the silver today, but I believe that this last week's lows will hold. I'd be surprised to see it taken out. We do have some resistance to overcome, but I believe that a new wave has begun. I'd be buying breaks if offered all the way down towards the 21 level if we get something here this week. And it's my preferred long because of the shape of the gold-silver ratio, although I also like the gold. And the only thing that would change my mind would be for us to take out the lows that we put in last week in gold under the 1805 level. Then something else may be happening, and perhaps a major Russian gold sale to China or something will be used as an excuse to sell it off. Over 1840 in the gold, I think you have a green light. We've tried it quite a few times. Look at this band of resistance here in the gold. The gold shares finally came to life on Friday. They put in some nice formations, and in fact, the silver shares have been stronger than the gold shares. Just to give you a couple examples, Newmont held previous lows, but GDX took them out with divergence, and we're lower today. Also, even B2 Gold Corp made a new low last week with divergence. Still believe a bottom is developing here. But take a look at these two silver juniors. Classic pullback to 78.6 before we had a bounce in Endeavor. And same type of scenario in Fortuna, didn't quite get down to the 78.6 level. So as you can see, the silver miners have much better structures than the gold miners and continue to be my preferred long, although I believe that the gold miners will also work. So we're having a little bit of a fade in the yen up here. When I look at the daily, I can see two scenarios where, this is going to be a failing rally and we work lower. But if you look at the formation on the daily, you have drive 1 here with a confirmed high. You have drive 2 here with a divergent high, even a little bit under 70. And if we rallied one more time towards 37, 37 and a half, it won't confirm. And, this too is tied to yields. So it's going to be interesting. Yields are trying to firm up from their low. It was a very nice break in the 10-year from 350 to almost 3. And we'll see if we're going to get another shot up towards 350, or this may just be a failing rally. I'd look for a setup that if the yen made new highs and the 10-year did not make new highs in yields, that I'd be buying the break. And one of the things you could be looking at is possibly this low developing here in the bond market. Everyone with me? Okay, I want to cover the currencies now. So a lot of people have been waiting for this euro to break down under 103.50, and it's sure taking its time. In fact, it looks like we could begin to squeeze over 106. That could take us back to 108, 109. I'd have a line in the sand in the dollar index at about 103, and this is why. This is the dollar. Let me go back and move me. Okay, so this was a COVID high. At this COVID high up here was 102.99. So getting back underneath it, to me, this looks like we have a 2 drive. Look at the similarities between the DXY weekly and the yen weekly and the yen daily. The yen daily looks more like the DXY weekly. But if we had a new high and it pushed just above 106 at some point in the next week or so, I would use that as an opportunity to be a seller in the dollar. I think we're in a major topping formation in the dollar, and the jury's out whether or not we can squeeze out one more high, or we're just going to roll over from here. And it's really kind of the same situation in the end too. Are we just going to roll over? Similar glaring divergence. So we're either just going to roll over here, and I would welcome new highs in both US dollar yen and the DXY for selling opportunities and what I think is going to be a major trend change in the dollar. So, you know, we're entering this time zone where that could happen. I want to touch upon the Aussie as well, because the Aussie has been a bit weaker than the euro as expressed by Euro Aussie. And we're either going to turn just like the euro, say we start getting back over, you know, 70 cents, big round number, it's going to look okay. Otherwise, I would welcome a break to 67.50, a 200 pip decline for a buy in Aussie. And the big reason is when you look long term, let's get out our telescope on the monthly. This was a COVID low that I think could be generational, or that we won't see it for a long time vis-a-vis Blake Morrow. And here we are just correcting this decline for the last 2.5 years. So I think we're getting to an inflection point in Aussie as well. I wanted to cover the stock markets, which is something Mike and I talked about the S&Ps last Tuesday, and this was last Tuesday right here. Okay, this was Friday, Monday, this was Tuesday, and how they bought that break, and then we had this explosion on Friday. We're due to have some give back, but I want to point to a poll I saw on CNBC that only 27% of market participants believe this is an important low. So they're looking for lower lows, which means that there's not a lot of belief in this move. It was hard to catch because this was right before the holiday and the Juneteenth holiday. And then we had an update when we were closed, followed through, and only had one intraday break. So, you know, there's going to be people selling rallies all the way up. What tempers my bearishness, and Mike and I talked about the all clear, and maybe we're going to see 41, 4,200 last week. But one of the stocks that Mike bought early on that I've been following is Google. Okay. And Google, when the NASDAQ was making a new low, put in a higher low. And now we're right at this 2,400 resistance. And we could get a pullback, but closes back over 24 with a low under 21, call it 3.5. is going to take you up towards 27. Okay, so there could still be a pretty good wave ahead, with Google being one of the market leaders in FANG. One of the few that did not make new lows. Microsoft made a new low. So to me, Google's the leadership, and as long as there's going to be strength in the market, I think Google has to lead. So just wanted to talk about that so you can kind of not get too bared up here. There is a possibility that we kicked off a summer rally last week. It's still the contrarian view. And the biggest contrarian view would be that Google not only gets to 2,700, but then eventually takes it out. And if that happens, we're looking at new all-time highs in Google. So Google is really good. Here's 2,700 again on the weekly. And that's a big trade from here. So that's what I think Google has left in it. And then the jury will be out up here. But I'd be using weakness wrong under last week's low. Okay, that would take you, back under 2,100. So you risk a couple hundred to make 3 or 4 on the upside, but maybe you could buy a pullback at, say 23 or so, 22.5. So liking that look. Want to talk a little bit about energy, which is trying to rally, and see if our viewers have a long memory of what we were saying in nat gas at the top. And to cover and even to get short here. This was as good as a break. Should I really bring back your memory to Freeport McMoran up here? Okay, so now I wanted to touch upon the yields. So here we go. Here's the 10-year. And this was a confirmed high, so you can't rule out another high, but there is a possibility, just like the yen, that we don't make a new high here, that we have some type of failing rally. That's something I'll be monitoring pretty closely. And here's something that I think is a real tell for the stock market. And as you can tell, my bearishness was toned down, and this was not a surprise. Here at TradeGATEHub, Mike was a buyer. We were talking bullish last Tuesday, even the week before, looking for buy zones under at 36.80, with 36.40 being the low. But when you look at this daily on the Russell, which you have to say people call it low quality or trash, I seem to think that they're the most speculative part of the market. And what you had here was an island bottom where we gapped down here and played in that area. And then we had a gap up on Friday, leaving all these shorts trapped. And also, we had a breakdown of what should have been major support. Remember, we held this before the last rally, and it held right where it had to, based upon prior tops, prior breakouts, previous COVID highs, and looked like he had a breakdown. And here we are back above this 170 level, 169 level. So it's very possible that the Russell is about to have leadership on this rally. Island bottoms are pretty rare. They don't happen much in FX because the market never closes except Sunday evening. You could have a gap from Sunday to Monday. But the Russell looks like it's just getting started here. And why can't we even have a bear market rally without even talking about new highs to take us up towards 200 in the IWM? Okay, someone's talking about Eli Lilly. Actually, I'll wait and talk about that tomorrow with Mike. So just a recap of what I'm talking about is it looks like Euro wants to squeeze higher, and that for now, this 103.5 takedown might be off the table. Your line in the sand should be about 103 in the dollar index, the COVID previous high, after COVID. You know, you are diverging on multiple time frames. Be careful about your yen longs. It was higher this morning. No reason we can't, if we don't make a surge to new highs, fill out all the way to 131, which will imply lower yields if that happens. So I'd be a buyer in the bond market, the note market, looking to be a seller in US dollar yen, gold, even though it has this bearish news back over 1840, I expect acceleration to the upside. Silver still up 20 cents, although pulling back. This to me is a market that you buy breaks, and the silver shares look better than the gold shares. And be careful in energy. Even though I think there's a possibility we could rally back to 112, this is not constructive action. Let me just remind you that we were talking about probing and protecting up here above 120. Last week's lows were down around 101. So I think if we stay under 112, the path of least resistance is to the downside with an eventual breakdown under 94. That's going to give you first 80 and then $60 crude, which sounds like it's unrealistic. A little more realistic than when I was talking about it here or here. But this was a failing rally, and if you just take 1.618 of this, which was $34, 50, 60 bucks from here takes you down to these long-term moving averages. And here's your 200, 61, 64. I have a very interesting guest on Thursday. Get the word out. I'm going to be with Joseph Wang, who worked on the desk at the Fed. His Twitter handle, I believe, is at FedGuy12. And, you know, he has his views on what the Fed is attempting to accomplish, including crashing the market. I'm going to be interested to hear what Joseph has to say now that we're getting a little bit of interest rate relief, or as a possibility of that, as well as some relief with commodity prices under retreat. And it's not just oil. Copper has been a big short. People know I was bearish of copper up here, and still doesn't look like it's bottom. In fact, it's starting to approach one of the targets I had, 350, 320. Let's see if it gets there. And what a difference between copper and gold. So copper's been the weak sister, and perhaps it hasn't bottomed yet. But this is, again, guys, keep an eye on the gold silver ratio. We start taking out last week's highs, and silver could get trashed again. I don't think it will. But we start taking out this 82 level, this straight line. Actually, it's a moving average. So the moving average is coming in at 82.30. We take that out and we could get something like this. And that'll mean massive outperformance of silver against gold. Good hunting. You could tune in and catch Mike in an hour and 12 minutes. Hope that we're adding value. Hit that like button if this guidance is giving you a little bit of help or an edge in your trading. Visit TradeView Markets and check out all the different instruments you can trade. And we always welcome you into our trading room where things are posted, and a lot of great content by Mike and other community members. So good hunting this week. And you know my ideas. I'll be back with you on Wednesday, and tomorrow Mike and I will try and keep our streak going of being pretty spot on with a lot of the turns that we've called here in the market. Adios, and remember, don't just count your pips, count your blessings.